Hello and welcome to our channel. We trust you have been keeping well. We continue our journey through insurance clauses. In today's video, we will be discussing the definition and application of an average clause in insurance and dive deep into what an average clause is, how it works, and why it is an important consideration in insurance policies. Picture this. You own a property and insured it against potential risks. However, the insured value of your property has remained the same throughout the years while everything else around it, including inflation, market value, and even currency adjustments, keeps rising. If the insurance policy maintains the same value for a number of years, the cost of replacing or rebuilding the property will be higher than the insured value. This is known as underinsurance. Underinsurance means that the actual market value of a property is much higher than the insured value. When you take out any property insurance, you'll estimate its value, i.e., the amount of money it would take to replace, restore, or rebuild the property, and it is on the basis of the value you give that the insurance company will calculate the price of your premiums. If there is a claim and it is found that the actual cost to replace your possessions or rebuild, repair or restore was higher than the amount declared in the insuring documents, then you're underinsured and you run the risk of being unable to claim for the true and total cost of any losses you incur because the insurance company will not be liable to pay for the actual amount, but rather the insured amount in proportion to the claim amount. How then do insurance companies deal with underinsured at the time of a loss? The short answer is, by applying the average clause. An average clause is a provision that included in property insurance and liability policies to ensure that policyholders who do not insure their property to its full market value, i.e., underinsured, do not benefit by claiming full market value when a loss occurs. When an insurance policy contains an average clause, it means that if the insured property is underinsured at the time of a loss, the insurance company will only settle the claim by an amount proportionate to the insured value. This proportion is determined by comparing the sum insured to the actual value of the property at the time of the loss. Here's an example to illustrate how an average clause works. Let's say you have a property with an actual market value of $500,000, but you insured it for only $250,000. The property is underinsured, and if a covered loss occurs, let's say a fire damages the property, causing $100,000 in damages, the insurance company will apply the average clause. The amount of compensation, taking into the account the underinsurance, will be arrived at as follows. Take the insured value, divide it by actual market value, and this will give you what is referred to as the claim payout ratio. In this example, as illustrated above, take $250,000, which is the insured value, and divide it by $500,000, which is the actual value, and you get 0.5, which is the claim payout ratio in this case. The insurance company will then apply this ratio to the total claim amount. Again, $100,000, which is the total claim amount as per our illustration below, multiplied by the claim's payout ratio of 0.5 will give $50,000. This is the amount the insurance company will pay towards this claim, which is proportionate to the insured value. Importance of an average clause. The purpose of the average clause is to encourage policyholders to adequately insure their property and prevent them from underinsuring to save on premiums. It helps ensure that policyholders share the risk of loss appropriately with the insurance company, based on the value of the insured property. Insurance policies where an average clause will apply in case of underinsurance. An average clause may apply in various types of insurance policies in case of underinsurance. Here are a few examples. 1. Property insurance. Property insurance policies, including homeowners insurance, commercial property insurance, and business interruption insurance, often contain average clauses. If the insured property is underinsured at the time of a loss, the insurance company may apply a proportionate settlement based on the insured value compared to the actual value of the property. 2. Marine insurance. Marine insurance policies, such as cargo insurance or hull insurance, may include average clauses. If the insured cargo or vessel is underinsured, the insurance company may proportionally reduce the claim payment based on the underinsured value. 3. Motor insurance. Some motor insurance policies, particularly those covering comprehensive or collision damage, may include an average clause. If the insured vehicle is underinsured, the insurance company will apply a proportionate settlement when compensating for damages. 4. Liability insurance. While average clauses are less common in liability insurance, certain policies, such as professional liability insurance or directors' and officers' liability insurance, may have specific provisions related to underinsurance. These clauses can affect the calculation of policy limits and the insured's share of liability in case of underinsured coverage. How to avoid underinsurance. To avoid underinsurance, consider the following steps. 1. Accurate valuation. Ensure that you accurately assess the value of the property or asset you wish to insure. This includes considering factors such as replacement cost, market value, and any additional costs associated with rebuilding or replacing the property. It may be helpful to consult professionals like appraisers or surveyors to determine the correct value. 2. Regular reviews. Periodically review your insurance coverage to ensure it remains adequate. Market conditions, inflation, renovations, and acquisitions can impact the value of your property. Regularly reassessing your insurance needs will help you maintain appropriate coverage levels. 3. Seek professional advice. If you're unsure about the valuation or coverage amount, consider consulting with an insurance broker or agent who can provide guidance based on their expertise. They can help you assess your risks, understand policy terms, and determine the right level of coverage for your specific situation. 4. Understand policy terms. Familiarize yourself with the terms and conditions of your insurance policy. Pay close attention to any average clauses, co-insurance requirements, or valuation methods outlined in the policy. Understanding these details will help you make informed decisions regarding coverage. 5. Extended replacement cost. Consider opting for an insurance policy that includes an extended replacement cost provision. This coverage provides additional protection by allowing for coverage above the insured value in case of unexpected increases in construction costs. 6. Rebuilding and code upgrades. When insuring a property, consider including coverage for rebuilding costs and code upgrades. In the event of a loss, these additional coverages can help ensure that you have adequate funds to rebuild or repair the property to meet current building codes and regulations. 7. Document your assets. Maintain an up-to-date inventory of your assets, including detailed records, photographs, and appraisals. This documentation will help support your insurance claims and facilitate the process of determining the appropriate coverage amount. 8. Seek multiple quotes. When obtaining insurance coverage, it's beneficial to seek quotes from multiple insurers. Comparing different policies and their terms will give you a better understanding of available options and help you make an informed decision. Avoiding underinsurance is essential to ensure that you are adequately protected in the event of a loss. By following these steps and working closely with insurance professionals, you can minimize the risk of underinsurance and have peace of mind knowing that your assets are properly covered. Differences between the general average clause and the 85% condition of average clause. In our earlier video, we discussed 85% condition of average clause, its definition, and interpretation. The 85% condition of average clause and the general average clause is more or less the same in terms of understanding and definition. However, there are some differences in its application, scope, threshold, and variations. The main differences between the 85% condition of average and an average clause in insurance are as follows. Number 1, application. An average clause is a broader term that can refer to various provisions related to proportionate settlements in insurance policies. On the other hand, the 85% condition of average clause is a specific type of average clause that applies to property insurance policies, particularly those covering buildings. Number 2, threshold. An average clause can have different thresholds or conditions, or it may not have a specific threshold at all. In contrast, the 85% condition of average clause sets a specific threshold of insurance coverage. It states that for the clause to be applicable on underinsurance, the insured value of the property must be below 85% of its market value. Number 3, calculation. In general, an average clause follows a similar principle, but the specific calculation method may vary depending on the policy terms and conditions. Under the 85% condition of average clause, if the insured property is underinsured below 85% of its value and a loss occurs, the insurance company applies a proportionate settlement. The settlement amount is determined by calculating the ratio of the sum insured to the full value of the property. The insurance payout is then reduced accordingly. Number 4, scope. An average clause can apply to different types of insurance policies and cover various aspects, such as valuation of assets, calculation of indemnity, or settlement of losses. On the other hand, the 85% condition of average clause typically applies only to property insurance policies and specifically focuses on the insured property's value. It aims to encourage policyholders to insure their property adequately by setting a threshold for coverage. Number 5, policy variations. The inclusion of the 85% condition of average or an average clause in an insurance policy is not universal. It depends on the insurer, the specific policy terms, and the regulations in a particular jurisdiction. Not all insurance policies include an average clause, and even when they do, the details and thresholds can vary between policies and insurance companies. Conclusion. Understanding the average clause is crucial because it emphasizes the importance of adequately insuring your property. By doing so, you ensure that you will receive full compensation for covered losses and avoid potential financial hardships. It's always crucial to carefully review your insurance policy and discuss any questions or concerns with your insurance provider or agent. In the small print of some home insurance documents, you'll find mention of the average clause or the condition of average. Thank you for watching our video on the application of an average clause in insurance. If you have any further questions or would like more information, please don't hesitate to reach out to us. Remember, being well informed is the first step towards making smart insurance decisions.